Bismillahirrahmanirrahim. Assalamu alaikum. I am Syed Akif Shah, lecturer finance at Institute of Business Studies, Kohat University of Science and Technology. The title of this course is Principles of Accounting, and the course code for this subject is BS 161. This is our lecture number 25. And the topic for today's discussion is journal, posting entries from journal to the ledger accounts, and then making a trial balance. So basically this lecture is in continuity to my previous lecture, and I strongly urge to the listener of this lecture to listen to my previous lecture on the same topic, because in the previous lecture we have completed the first step of a numerical case we have selected from the recommended book. That is, we have covered in detail how to journalize the economic events in a proper format of the journal. After that, we are going to post the same entries into the ledger account and then to make a trial balance, which will be the crux and main emphasis of this lecture. So the outline of this lecture will once again cover the understanding of the accounting cycle. And then we have selected a numerical case from the relevant book, that is problem 3.5 on page 134. You can see this problem in detail. And we have already covered how to journalize the economic events in the journal format. So basically we're going to complete the next two steps of the accounting cycle of the same problem what we have selected for our discussion. This is the main reason I am strongly recommending to the listener of this lecture to first go back to my previous part 1 of this lecture and to have the full command on journalizing the entries, because this is an accounting cycle which starts with certain economic events in a legal firm. And on the basis of that economic event, we are going to journalize that entry. After journalizing properly, we are going to use the same cycle for the next step, which is step number 2, to post the journal entries by selecting the relevant information and to posting them into the ledger accounts. Now, what is a ledger account? A ledger account is a specific account which explains the second part of the accounting definition, which I have explained already, that accounting is an art of recording. So art of recording has been done in the journalizing entries, and then to classify the entries. So now ledger account are basically the classified accounts of the same entries what have been recorded in the chronological order in the journal. So basically the emphasis will be on ledger accounts, and then from that step number 2, that is the final balances of the ledger account, shall be taken and carried forward to the next step, which is step number 3, to make a trial balance, so that we should make sure that either we have done our journal entries and then posting into the ledger account in a correct way, or we have committed any mistake while journalizing those entries in the previous 2 steps. So this is main idea, or the main reason of making a trial balance is to have a counter check of our previous 2 steps, because this will help us to figure out any mistake in the previous 2 steps of the accounting cycle. So this is the reason we are saying that it's a trial balance, and if both sides of a trial balance match with each other, then we have not made any mistake. And if there is certain mismatching in the trial balance values, so definitely we will have committed certain mistake in the previous 2 steps, which needs to be rectified in the 4th step, that is to make an adjusting entry, which will be discussed in the subsequent lectures. So let's move ahead. That we have taken an example of a 3.5 of the same book, of accounting book, on page 134. As I have already explained each transaction and how to journalize them into the journal. So this is why I'll not utilize my time on once again the discussion of the journal entries and as well as on the debit and credit rules, because I assume that you have already understood the debit and credit rules in the form are in a diagram of a diamond shaped diagram, which really assists to the students to grab the idea about how to journalize any economic event in a proper way by recording its debit and credit entry. Let's have a slight revision of the problem. That is, on June 2001, Pat Campbell has organized corporations to provide the services of crop dusting to the clients. The company called it as a Campbell Crop Dusting Company. It was the name of the company, and it began operation immediately. The transactions were as follows, as starting from June 1 to the 2nd, 4, 15, 15, 18, 25, 30th, and then we got certain events on the same final day of the month. As I have already journalized them in detail with the help of chart of account already given in this question. This is chart of account, and we have selected the same account titles what are available in the chart of account. So this is why this chart of account really assists us to journalize the economic event properly. And we have done this step as covered in the previous lecture. So the emphasis will be to post those entries from the journal into the ledger accounts. So one crucial hint for the student is to look into the chart of account, and as there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So as there are 12 accounts given in the chart of account used by the company. So this is why we are going to have 12 ledger accounts, that is separate classified account that will explain one particular account title's relevant entries. So let's see how to do those and how to make the ledger accounts. As there are two options, either to make ledger account in T-shape or to use a proper format by having it certain columns explaining each section, that is a date section, explanation, debit, credit, and then finally a balance column, which is known as a table format, a running balance format of the ledger account. So let's see, we'll select the most sophisticated technique, which is to use the running balance method to record the to post the entries into the ledger accounts shortly. We'll see those entries. Here we do have already done our journal in which is well explained in my previous lecture. So we got the journal entries as mentioned before you. So what's the next step? After journalizing them, each transaction of June 15, 18, 25, and then similarly 30th and 30th June, the next step is to make the ledger accounts. So the first ledger account available with us in the chart of account is, let's go back to the question. So we have to make the ledger account for the cash first. So let's move to the relevant section and see how to make a ledger account in the running balance format. This is basically students part number B, that is to post entry into the ledger accounts. We have to mention the specific title of this ledger account, as this is a classified account explaining one particular account, because this is not going to have a messy format of recording the entries. Rather, all the entries available in this running balance will capture or will be relevant with cash only. So basically we have 5 columns in this cash ledger. The first column is of date. The second column is for explanation, that is what's the reason of having a debit or credit entry for cash. The next column is for debit. The second loss column is for credit entry, and the final column, which is important one, is the balance. This is why it is known as a running balance format of making the ledger accounts. So what you have to do is to go back to your previous step number 1 in the journal, and try to find out the cash related entries. So let's go back. Here we do have our first entry of June 1st, and we got a cash entry, and the cash entry is having a debit balance. The first entry is pertinent to the cash on the very first day of June, and cash is having $60,000 debit entry. So what we have to do is to pick up this value of cash from the debit column and insert it or post the same value into the cash ledger account. Let's see. Here we have done the June 1st entry, and we have mentioned the 1st of June entry just in the straight line towards the June 1st entry in the debit section of this cash ledger. And as there was nothing there on the credit side in the journal, so this is why we can insert a simple dash or a line that is depicting that there was nothing in credit on this specific date, which is June 1st. So let's come towards the balance column, and as we have a debit balance for cash, so this is why the balance column will represent $60,000 in debit balance for cash ledger. This DR represents debit record. So what you have to do is to once again go back to the journal and critically analyze where the cash has got any debit or credit entry. So let's scrutinize or analyze the second transaction. This is aircraft, so we have nothing to do with this. We got a cash account once again there available in the second entry, and this time the cash balance is having a credit amount. So go back to your cash ledger, June 2nd, nothing in debit column, rather there is 40,000 in the credit column. So what you have to do is to set off the balance now, because we have already debit balance for cash, but this time we have credited our cash account. So this credit and debit will set off each other, as we know that the debit is greater than the credit value. So therefore the remaining value to be mentioned in the balance section is 60,000 minus 40,000. The remaining balance is $20,000. So let's go back to the journal once again and try to find out the next cash entry. Let's look into June 4th. Rent, we have nothing to do with the rent or expense. We have to go for the cash amount. And once again, the cash is having a credit balance in the journal. So let's post this entry into the cash ledger account. Here we have June 4, and once again there was nothing in the debit section, but rather we are having a $2,500 into the credit column, and we have posted this into the relevant place. Let me remove the ink so that you can see clearly the next entry. We were here on 20,000 running balance, which is a debit balance in the cash ledger. And once again, we got a credit entry for cash, which is $2,500. So we have to minus it from the previous balance, which is 20,000. So the remaining amount is now $17,500. So once again, you have to go back to the previous slide of journal. Let's analyze June 15. Is there any cash related entry? It's account receivable, no. And crop dusting service, no. So we have to go towards the next entry because there is nothing in cash involved on June 15. Let's go ahead. The next entry in the June, what we have done in the journal is pertinent to the salaries and as well as to the cash expense. So the cash payment was there against the salaries expense, and it's once again having a credit entry. So let's go into the journal, into the ledger account, and post the June 15 entry. Nothing in debit, 5,880 in credit, which we have to minus from the previous balance, and then to write down the cash level in the company is now $11,620. Let's go back to find out the other cash related entries. On June 18, we got again cash payment against the maintenance expense, which is 1,890, and since this is in the credit column, so we have to pick up this amount once again and to insert this into the ledger account in the next entry of June 18. We have once again credited $1,890, which we have to subtract from the previous balance, and the resultant value should be written down in this place, which is 9,730 now. So what question arises here, that what's the purpose of this explanation over here? Let me explain right now. I have intentionally omitted certain values so that to take my listener of this lectures along with me, so that I can insert relevant information. And what usually the student do is they omit or commit certain mistakes which looks like avoidable, but those are really important. One of that is to mention your dollar sign for your each column, or you can another way around, you can also insert the dollar value with the first value in the column. However, for the remaining you can omit down, or another way you can mention the monetary principal in the relevant column, like in this fashion what I am doing right now for the balance for credit and debit. Let me explain what you have to do with the explanation column, as we are on June 18 entry, and this payment is for maintenance expense. So for whatever reason we are going to pay the cash amount, we have to write down over here, like paid for maintenance. You can write down paid this amount for maintenance. So you will be able to understand that for what purpose this payment was done. Paid for maintenance. Right? So you have to write down a short narration in the explanation column, what is already available in the journal as well. Let me explain where it is. Here you can see that paid maintenance and repair charges. So you have to pick up this short narration, what you have done in the previous step, and you can write down in the ledger account as a reference point. So let's go ahead with the next entry of June 25, and we got once again a cash as a debit balance against what? Against collected the part of bills of June 15. So let's post this entry into the ledger account, which is of June 25. This was in the debit column, nothing in the credit column. Already the previous balance is debit, and this balance is once again a debit balance. So we have to add up these two values because both balances are debit balances. So 9,730 plus 4,910, and our next balance is now $14,640. Let's go back to the journal and to analyze if there are more cash related transactions are there. We have to analyze June 30th. Is there any cash? Nothing related with cash involved in this entry. June 30th. Yes, once again cash is there as for salaries expenses of $6,000. So we have to insert this value into the next step. June 30th. Credited 6,000. Now this balance is credit and the previous running balance is debit. So therefore we have to subtract this amount from the previous balance, and now our running balance is 8,640. Let's go back to the journal so that we can analyze more instructions or more journal entries. Is there any cash? No cash is involved on June 30th for fuel expense. Let's analyze our final transaction, which is June 30th. Is there any cash? Yes, cash is involved over here, against which $2,000 paid because the owner has withdrawn this amount. So you can write down this short narration in the ledger account as well. So here we come, the last entry for our cash ledger. We have $2,000 in the credit column. Therefore, we have to subtract once again this value from the previous running balance. Subtract it because this is credit and this is a debit balance. And therefore, the final balance of our credit of our cash ledger account is $6,640. And you have to put double line beneath this balance because there are no more cash related entries in the journal. So this is our final balance for cash ledger, which we have to carry forward to the next step for making trial balance. So dear student, basically there are many cash related transactions in the journal usually. This is why the cash ledgers normally takes lots more time to make while you are attempting or posting your entry into the ledger account. However, for the subsequent ledger account, you will see shortly that there are very few entries involved in the journal. So let's make our next ledger account. And what's that? We have to go back to the question. In the chart of account, we have account receivables for which we have to make the next ledger account. Let's analyze once again how many times account receivable was having a debit and credit entry. Is there any account receivable? No. On June 2, once again, no account receivable. On June 4, no account receivable is involved. On June 15, yes, account receivable is there. So you have to carefully analyze your transaction. On June 15, the company was having $8,320 of account receivable in the debit column. And the narration states bill customer for the first half of June. So how to make this second ledger account? Let's go back to the ledger section. And here we have our next ledger account, which is account receivable. Once again, you have to follow the same pattern, which I'll not explain right now because I have already explained how to make a running balance format ledger accounts. On June 15, the balance was in the debit column. Nothing in credit. The balance in the ledger account is 8,320. Let's go back and to further analyze where there are certain account receivable related entries. So let's try to find out our next entry. Is there June 15? No. Maintenance and cash? No account receivable. Cash and account receivable? Yes. On June 25, we have credit value in the account receivable in the journal. So therefore we have to plug this amount in the credit column in the account receivables ledger. So here we have June 25. We got nothing in the debit section, but there was 4,910 in the credit column. This is credit entry. The previous running balance was debit entry. So therefore we have to subtract it and the remaining balance shall be written over here, which is 3,410. Let's go back and further analyze if there is any other entry involved in the journal pertaining to the account receivable. Let me remove all the ink. On June 30th, yes, once again account receivable is there for 16,450, and the reason is this company has once again billed to the customer for the services. Let's analyze further before going to the account receivable ledger account. Salaries and cash, no account receivable is involved. Fuel and expense and accounts payable, no account receivable, and once again in the final entry nothing is involved. So the final value for the account receivable ledger account available in the journal to be posted into the ledger account is of June 30th. So let's move ahead to our relevant ledger account, and here we have our final entry, which is June 30th for 16,450. This is in the debit section, and our balance was also having a debit balance, so this is why both values will add up to the final balance of $19,860, which shall be taken or carry forward to the next step. You can see that I have inserted a double line beneath the account receivable ledger. When the values will end, you can insert a double line and it will represent that this section has closed down for the account receivable. So you can do or insert double line very carefully while attempting your question during examination. You can later on erase this section if you are using a lead pencil while attempting on your piece of paper, so that each ledger account should be segregated or bifurcated from the next one clearly. So let's go back to the chart of account and find out what's the next chart or what's the next account for which we have to make a ledger account. So the next title is to make a ledger account for aircraft. Let's go to the next slide and to find out where do we have entries pertaining to the aircraft. Is there any? No, no, no. Only one entry we have related with the aircraft, which is belonging to June 2nd, and its value is in the debit column, so therefore we have to insert it in the proper way, aircraft ledger. Rest of the explanation as it is. June 2nd value was in the debit column, and here we have the final balance needs to be carried forward to the next step. So now it's time to quickly go through the rest of the chart of accounts so that we can discuss the next step, which is let's see, the next balance is for notes payable, and then accounts payable, and then for the capital. So I will explain only few over here, and then we'll go directly to the next step to discuss the trial balance. So let me explain the crop dusting revenue ledger account, because the rest of the accounts, ledger accounts, have been made in the same fashion what I have discussed for the cash for account receivable. So you can do the same for the rest of the accounts. So let's see how many times the revenue is having, revenue is changing in this journal. So we have only revenue entry on June 15, and it is having a credit balance of 8,320. So let's go to the ledger balances. Here we have crop dusting revenue ledger balance. I have intentionally omitted to write date, explanation, debit, credit, and then the balance, because now I assume that you understood what is there and what is the title of each column in order to save certain time. So June 15, 8,320, it is having a credit balance, and next we have another credit entry on June 30th. We can see in the journal, here we have our next revenue related entry, which is June 30th. Once again, the revenue was having a credit entry of 16,450, which should be posted into the ledger accounts. So here we have it's 16,440, and then both values are in the credit column, so therefore the credit will add up, the debit and debit will add up. However, the credit and debit will be subtracted from each other. The final balance in the crop dusting revenue ledger account is 24,770. So basically we got our cash ledger. According to the chart of account, we have to make the cash ledger. Then we had made the account receivable ledger. The final balance is 19,860. For cash ledger, the final balance is 6,640. For aircraft ledger, we got 220. For notes payable, we have 180. CR means credit, DR means debit value. The account payable ledger was having credit balance. Since we have only one entry related with the accounts payable, so this is why these ledger accounts are pretty easier to make later on. For Pat Campbell Capital, only one time the owner has deposited amounts, so 60,000 credit balance, and as well as owner has withdrew the amount only one time from the capital of the business, so therefore it is having only single entry, which is 2,000 debit balance. Revenue was having two entries. The final balance for revenue ledger is 24,770, which is highlighted or encircled in the red color. Maintenance expense having debit balance 1890. Fuel expense debit balance. Salaries expense final balance is 11,080. You have to put double line beneath each value so that we should understand that the ledger account has closed down. For the rent expense, we have $2,500 debit balance. So this is the way how you can make each ledger by picking up the relevant amounts from the journal and to post them into the ledger accounts. So this activity is basically known as posting entry into the journal, into the ledger account. Now let's go to the third part of our question, which is to make a trial balance. The question asks you to make a trial balance, and now it's time to see if we have correctly posted our entries into the journal, into the ledger account or not. And the question states in part C that prepare a trial balance at June 30th, 2001. So let's see how to make a trial balance and what are the important rules and regulation, and how to make a trial balance by using the data available in the previous step, which is ledger account balances. Let's go to the third step, which is to make a trial balance. Here it is part C related with trial balance and how to make this trial balance. First of all, you have to mention the company's name at the top, which is Campbell Crop Dusting. In the second line, you have to mention the trial balance. And in the third line, you have to mention the specific date, which is June 30th, 2001. Because the question was asking you to make the trial balance on this specific date. The next step is to use, if there is chart of account is already available in a question, then you can use the same sequence for writing down the account titles. However, if that chart of account is not available, then I have already explained in chapter number 2 the order of liquidity, that is to mention the highly liquid asset at top and then to use the remaining, or then to write down the non-current assets. Similarly, you can another hint could be that you have to follow the balance sheet pattern for assets, for liabilities, for equity, for revenue and expenses. So basically it has three sections. Firstly, you have to mention the assets first, then liabilities, then entries related with owner's equity. So balance sheet entries cover up over here. Then the revenue minus expenses. So revenue and then all expenses should be written down in a proper sequence. So this is the basic idea. However, as we have already have chart of account available, so we can follow the order or sequence of the chart of account if that is already mentioned in a proper sequence. So basically it has 3 columns. The leftmost is for the account titles. The second one is for all debit entries. This is basically our debit column. And as we know that in double entry accounting system, all debits must equal to the total credits. So total debit amount and total credit amounts must be equal to each other in the trial balance. So this is our credit column. You can mention a dollar sign on the top of this column. I've intentionally missed these entries because I thought I should mention them while delivering a lecture. So from where come these values? Here is the important point that you have to go back to the second step of accounting cycle and try to find out the final balances available in the cash ledger, in the account receivable ledger, similarly in the Pat Campbell's capital ledger. Let's see and counter check them one by one in detail and in a proper way. So let's go back to the cash ledger. Here we have cash ledger and the final balance is 6,640. Let's go forward to the trial balance. 6,640 debit balance. So therefore we have mentioned in a proper column for account receivable. For account receivable, the final balance is 19,860. Let's pick up this value from here and insert in a proper way in the debit column under trial balance for account receivable. Done it. Let's go back to the previous slide for aircraft. $220,000 for aircraft final balance. Pick up this value and insert it over here in the debit column. Now it's time to insert for the liabilities. So here we have our liabilities. So let's see if the liability balance was in the credit column. So therefore we are mentioning that in the credit section. Let's go back to the notes payable and we can see that it was having a credit balance. So this is why it was mentioned in the credit side. And similarly for account receivable, it was also having a credit balance. So this is the reason we have mentioned these two values in the credit column for notes payable and accounts payable. Now let's discuss the owner equity section and to check out the ledger accounts for capital and drawing. For capital, we have a credit balance and for drawing, we have a debit balance. So debit in the drawing section and $60,000 credited for the capital. So let's pick up this value and insert them in the credits column and debit in the debit column. Final section of the trial balance is to have the revenue and all expenses section. So let's counter check the revenue, which is usually have a credit balance of 24,770. Let's counter check it out. Here we have crop dusting revenue 24,770 correctly inserted in the trial balance. And we can see that all expenses normally have a debit balance because with increase in expenses, it is recorded as debits. So therefore, maintenance expenses having a debit balance, fuel expense debit, salaries expense debit, and finally the rent expense debit. And we have inserted these values properly in the debit column of this trial balance. So after doing that, what you have to do is to simply sum up both the columns and try to find out that if these two columns match with each other or not. So if two columns, which is total debits, debit column, and the credit column match with each other, then your trial balance will have a correct answer and it will give you a signal that you have done your journal and as well as you have properly and correctly posted those entries into the ledger account. The final balance is $267,280 for debits And the same amount is there for total credits, which is $267,280 only. So for our values match with each other, this is why we have correctly made our trial balance. You have to bear in your mind company name, trial balance, June. This is a debit column, and the last one is for credit column. And importantly, you must not miss the double line beneath the final balance, because this represents that the question has closed down. So let's go back to our numerical case and see what it is expecting us to do in the final section. The question is saying that using the previous trial balance at June 30th, 2001 in part C, what we have for instance before done, compute each of the following value at June 30th, which is total assets. You have to add up total liabilities and total equity. And the second section asks us, are these amounts the figures that should be reported for asset, liability, and owner equity in the balance sheet of the company on this specific date? Explain your answer. So let's go to the final section. The total assets is cash, account receivable, and aircraft. We can add up these three assets and we can get the total value for assets. Similarly, for total liabilities, there are only two liabilities, as we can see in the previous section that we got only two liabilities, three assets, two values related with owner's equity. So here come total equity, total assets minus total liability. You can write down your total equity in this fashion rather than to directly subtract these from each other. The reason will be explained in my subsequent few lectures. So total assets minus total liability. So the total equity is 63,990. And the second part of the final question asks, are these values which should be recorded in the balance sheet in the subsequent step? So the answer is no. The above values are not the figures that should be reported on June 30th in the balance sheet, because in the trial balance we are usually normally these are after trial balance we have to use, because in the trial balance there might be certain chances that we have omitted certain entries which should be highlighted in the next step of accounting cycle. So the accounting cycle states that the balance sheet and other financial statements should be made from the adjusted trial balance. Let me tell you, here come the accounting cycles. We have completed the journal in this numerical illustration, posted those entries into the ledger account, and then have made the trial balance. But to make the financial statement, which consists of balance sheet as well, so balance sheet should be made from the previous step, and the previous step is adjusted trial balance, not the trial balance. So part D, second portion question asks us that, can we use this trial balance to make our financial statements balance sheets values? So the answer is no, because we have to make certain year-end adjustment, which shall be discussed in chapter number 4. And after making these adjustment, we have to make the adjusted trial balance. And from this adjusted trial balance, we can make balance sheet, income statement, or any other related information. Final value can be obtained. So this was all about the first three steps of the accounting cycle, that is to journalize entries, posting into the ledger account, and then making a trial balance. Thank you very much for listening to this lecture. If you have any question, you are free to ask on KCMS or another way around. You can also email me on my email address as mentioned in the footer of this lecture. Good luck for the day. Allah Hafiz.